Hi, I'm Sabrina Halper, and you're listening to Hoff Capital's podcast. Today on the show, we have Ken Nguyen, who is the co-founder and CEO of Republic. At Hoff, we've invested in Republic since its seed round, and today they've raised over $214 million. Republic is aimed at democratizing private market investing. So basically, you can go on Republic and invest in startups, real estate, crypto projects, restaurants, pretty much anything. It's a fascinating company with a great mission, so I hope you enjoy the episode. Hi, Ken.
Hi, Sabrina.
Thank you so much for coming on the show today. I'm very excited to have you here.
Thank you for having me. It's wonderful to be here.
You just landed, you're here, and I think, to start off, it would be so helpful if you could give our listeners a little bit of context on the history of an investment platform like Republic, and what is the legislation that has actually allowed crowdfunding in the private market for startups? How has that changed to make this a reality?
Well, you're not starting out a podcast with an easy question for me. That's for sure. That's a packed question, obviously a super relevant one. Before diving in on investment platform, I kind of want to walk down memory lane a little bit, or history lane.
Let's do it.
In that, since the Great Depression, up until about 5-6 years ago, you got to be a millionaire to invest privately. Mm-hmm. So all of these companies that started out young and then saw this growth and made a lot of people wealthy, well, unless you were a millionaire or be part of the team, you were shut out of that entire process. So 2016 on, the law changed a little bit in the United States, allowing for anyone to invest in private deals. It can be a startup, it can be real estate at the earlier stage, but they got to go through a few regulatory hurdle, including being vetted by a platform like Republic.com, which I run and operate. But I think it's going to open up this whole new era of everyone looking at investing as just a normal way of living.
Definitely. So when that law changed in 2016, before that, you were the general counsel at AngelList. And so I'm guessing that law change prompted you to kind of go for this idea and build it. And why didn't you spin it off of AngelList?
So AngelList actually had a role in convincing the Obama administration to change that law or to make that change. So I was a beneficiary of the effort of Naval and the AngelList team working to see that through. But in order to allow anyone to invest, accredited meaning millionaires, and non-accredited, you gotta operationally comply with what the law requires, and it's such a high hurdle that it makes sense for it to be an independent, separate company, and not a business model that AngelList should or could have taken on.
Got it. It would be like a whole brand new company. And today, I think the limit is 5 million, right?
For under Regulation CF, there are a couple pieces of laws. Anything involving securities law is nuanced and complicated, but a simple way of looking at that is that at the baseline, there's something called Reg CF. Any company can raise up to $5 million per year from the general public.
Okay, got it. And then taking it back a little bit, so your parents immigrated from Vietnam to America when you were little, and growing up here, was anyone around you able to invest? Was that something you grew up around or thought about?
It's a funny thing is I grew up in Sunnyvale, which was probably 5 miles from Stanford, right?
Yeah.
Like smack in the middle of Silicon Valley. But just because you're in the middle of where everything happens doesn't mean that you get to be a part of it. Mm-hmm. So obviously my parents weren't millionaires. I'm the last one of 5 older siblings. We're also just like kids and then young adults. So I actually didn't know anyone in my immediate family who were even in tech, much less get to invest. So you saw these headline news about like this new hot company called Google and eBay and Amazon. And it had actually nothing to do with your daily life. So one thing it did, though, was that it at least put it in my consciousness, the notion of like, hey, this is very cool. I kind of want to be a part of it, and I kind of want people around me and my friends to get to be a part of that too. And a decade or so later, it became a reality.
Definitely. And I'm sure it made you realize like we could be in the center of it physically, but that like that entry to barrier and the access is still so exclusive.
And it applies whether you're looking at social inequality or financial inequality, right? I mean, there's so many different aspects that plays out. So in a city like New York or San Francisco, so diverse, and yet at the same time, the pockets of inequality that leaves so many opportunities once fixed. And so Republic, and at least my mission anyhow, is to do the best I can to reduce the financial inequality component, and hopefully that there's a solution to some aspect of social inequality as well.
I think you're definitely on your way to doing that and democratizing, investing. So I'm sure your parents were very proud that their son was a lawyer. Did you ever expect that you'd start a company?
Well, no, because the idea of starting a company or a startup, someone said that you can't be what you can't see.
Yeah.
And so growing up, I mean, it was around me, but I didn't have any example of people starting company. But so it took me through professional school and a career in law, and with some financial stability, that at that point was able to say, hey, I have a degree of stability, and yet without a lot of family or personal obligations, maybe I can do this, and took a leap.
Definitely. And I mean, you got to a point where you're already, at a high-ranking position at like a very cool, growing startup, now big company, AngelList. And I'm sure that like in 2016, when you decided to start this, you were aware of how difficult it would be, like how in some ways revolutionary what you were trying to do was, and regulation-wise, you were going to come up against a lot of hurdles, and even like there's so many conceptions around it, but still you did it. So my question is, why did you start this company?
It's such a great question, and I think looking back, I probably, even though I knew it was going to be really hard, I didn't quite expect how much it would have taken me, like all in and day out, all aspects of life became secondary to building it. I think it's one of those things, if you find something to build that you're so passionate about, you think about it day and night, and if you don't do it, then you're going to regret even if you become a billionaire. I think that's when you should launch and build your own company. So it happened that I looked out and the law changed, and I was right in the venture ecosystem to see a window to do this. So it was kind of like one of those moments that the stars aligned for me to be all in, knowing that 90% would be 90% probability that it would not succeed.
Yeah, yes, it's true. So looking at Republic today, who makes up most of your user base? Is there, one certain type of person that you see often? Or I imagine a lot of jobs that make a lot of money actually aren't in tech still. And so, yeah, who is it?
So within the Republic ecosystem, we have over 1.5 million users, and
Wow.
adding on another million in Europe. The user base does represent the entire spectrum of the American public, from high school students all the way to very retired professionals. But the active investor base still lean heavy on professionals with some disposable income. Even though some of the deals, the minimum investment is like $20. So our hope is that as investing and owning becomes more and more and more normal, more understandable to the general public, that we're gonna see a lot more younger generation, Gen Z, beginning to invest tiny amounts, and as they earn and gain wealth, they invest more and more.
Totally. Like you can have a customer from like their 18th birthday till their 118th birthday is the idea, and like as they gain their own wealth, they can actually put more and more into the platform. That's really interesting. And I guess one question I have is like with a user base of 1.5 million people, compared to maybe an app like Robinhood, where someone can wake up every day and like see how their stock has changed, and there's a lot of instant gratification in that. How do you think about like keeping people's attention, keeping them involved continually on the app, when with startups it is sort of a longer process, like to eventually, reap the rewards, and there's less constant updates, like short attention spans? How do we fix that?
You basically hit it on the nail when talking about the biggest difficulty, the challenge of a business model like ours, which is how do you keep your investors, your users engaged when something may take 7 years before they see a return? Well, our solution to that is twofold. One is we're building out a secondary trading platform so that you invest and then you technically can list your investment and sell it to someone else.
Oh, so on that, I was actually wondering, so the idea is once you invest, you're building out an option where someone could actually sell their shares or their part of a share earlier than the eventual IPO.
Our goal is for that to happen sometime this year.
That's very cool.
To have that function. And the second aspect of it is that the lack of liquidity, which is the ability to sell, to buy quickly, naturally makes it a less predatory product. So you're not in it to make money, to get rich quick. That means you gotta really take your time, deploy your capital, and really believe in this product or this founder. So being an informed investor, in a weird way, the issues that Robinhood faced with students borrowing money, doing margin loan and invested more than they could afford or more than they should, you're unlikely going to see those type of behaviors with a private market investment platform like Republic.
Totally. That makes a lot of sense. So I guess the idea that the common, I would say, like idea that private markets are much riskier and 90% of startups fail. There's pros and cons to both, essentially, for opening it up to the public.
Absolutely.
Yeah.
It is true that if you invest in two private companies, the probability of loss of capital is much higher than if you invest in two publicly traded companies. But the fact that with a public market platform, you can borrow, you can invest, you can do all kind of things that may not be suitable for an inexperienced investor. Those predatory activities, you don't see a parallel, a shadow version on the private market.
Definitely. And I guess, do you believe that over time, the users that have been using Republic for, 3, 4, 5 years now and will be using it for 20 years in the future, do you believe over time they're able to become an informed investor? Like, how can they eventually become, an informed investor?
Also an excellent question. I strongly believe that you learn by doing, not by just reading books. So the best way to hopefully become an informed investors is by learning and making mistake with very small amount of money, and then maybe 2 out of 10 develop the passion to really become expert and deploy larger amount of money. You can't just tell people how to invest without them actually doing it and then expect them to invest with $100,000 once they have that wealth. The goal indeed is to train and give a degree of financial sophistication to even high school students.
Yeah.
So that out of 100, by the time they're 30 or 35, you have 5 very, very informed investors.
Totally.
Out
I believe that you guys will end up breeding a new generation or open up more people to be investors that otherwise just wouldn't have been exposed to it in their life.
Sabrina, the societal trend is already going that way with or without Republic. For example, your generation and the Gen Z, the notion of ownership, the notion of, hey, if I like something, I want to make money by owning it or by sharing its success, is so different than even just 10 years ago. I would dare say that right now, an average college grad understands the notion of investing much more so than 10 years ago and certainly 20 and 30 years ago. So that trend of everyone wanting to own and invest will fundamentally change the financial market as we know of them today.
Definitely. And when you say it like that, it sounds pretty aligned with like the explosion of crypto and Web3 and the idea of NFTs and the idea that, you know, you can own a part of your favorite band's next album, or you can own a piece of your favorite artist's, you know, NFT collection. And it's pretty interesting that in some ways I guess everything is getting a little bit more democratized, hopefully.
And Sabrina, if you were one of the first 1,000 people to use Instagram, in so many ways, you added more to that company in product market validation than some of the earliest venture investors. So if a company like that then became a multi-billion-dollar business, it's only fair, right, that the very earliest adopters get to share in that success. So I think over time, the general public will come to expect that if I adopt you a new product early on, I get to be a part of your success as well.
Okay, so I was going to ask this later on, but we're here now. This brings me to, I think, one of the most exciting aspects of Republic, or at least like the system that it's putting forth, and the expectation is something I'm curious about is, you know, companies, people that work at startups, if you work there early, the idea is like your part of your compensation will likely be in equity. And that's like one reason that you would be maybe taking a salary cut to build with this mission, or you're more invested in it. But I guess there's a lot of like secondary employees, like Uber needs Uber drivers, but they're not technically officially employees, or DoorDash needs people who will deliver. And in every sector, there's a relevance to that, and more, I think, as with the types of companies and tech companies. I guess, you know, what's your vision for the way, like, could Uber have offered through Republic some type of benefit for like their first 10,000 drivers that got on the platform, where they could, as a stakeholder, own a little bit of equity in Uber?
Absolutely.
Can you explain that a little bit more?
So the notion of community financing and community ownership are similar, slightly different, but similar. So take Kylie Jenner, the influencer. Next time when she launches a lipstick line or a fashion brand, I'm sure she can easily go to a VC and fundraise, or she can reach out to her fans, her communities, and say that, hey, I'm going to accept up to $50 in investment per fan, and in exchange, you're going to get a discount as well. She, I'm sure, can easily raise tens of millions of dollars to finance her next business without ever leveraging venture capital. And when a business like that gets acquired by Sephora, each of the 10,000 or 100,000 fans/investors get $500 out of the $50 that she invested. How amazing would that be? So I think that notion of community financing, and vice versa, the question that you just raised, is that if there's a community that had helped you become where you are today as a company, you gotta give them some sort of a stake, an ownership, an equity in your business. And I think there's gonna be a mutual acceptance and expectation between builder and the community that helped build that business.
Are you starting to encourage companies on the platform and founders you're friends with to, you know, participate in things like that?
You know, I think it's in and by itself a trend. I think you mentioned earlier the whole the tokenization or digitization of the world, but Web3 and NFTs and token offerings, these are different and early iterations of a new world that certainly we are encouraging that, but similar to the retail trend of everyone wanting to own and invest, I think that's going to naturally happen. Within this decade, if you build a business and you have retail customers, they are going to be expect to be an owner very early on.
And it makes a lot of sense for them. I guess for consumer companies or retail companies for retail consumers, it seems like an obvious choice to raise some part of your round or make it accessible to your customers, your consumers, your drivers, whoever it is. And you've said it yourself that it can turn a customer into a brand ambassador, and it's so true. If someone has even a tiny bit of skin in the game, they're so much more likely to feel like invested and proud of that company and always, go towards that specific company's version of whatever they're offering. But I guess what would be your argument for non-consumer facing companies to do it? Like a fintech company, what's the benefit of raising on Republic if they could raise from a traditional VC fund instead?
Even SpaceX, which is the ultimate model of B2B, right? They definitely are not serving everyday folks. But the notion of financial equity, of giving people around us, sharing in our success, I think is one, natural to most human beings. And secondly, there are few things that would do more good to society. The notion here on our side is that when there's a headline news in the Wall Street Journal about a company that's just about to go IPO, if there are 500,000 people who are like, oh wow, that means I'm gonna get $5 back. Not I'm gonna get it rich, but that I feel like I belong, that this has something to do with me. That I think is gonna do wonder in bridging whatever social divide that we're facing now. So even the SpaceX of the world, I definitely think should consider opening up their business to the public before enriching just VC and PE firms.
Oh, that's so interesting. So you would maybe even in their like growth stages, like if as companies stay private for longer, even in their ERF stages, they could still bring part of their round to Republic.
Absolutely.
Okay.
Basically, before they go public, anytime up to the point of going public, they can use or leverage a platform like ours.
Definitely. And for companies that are raising at a seed or pre-seed, would you recommend, like when they come to you and they're like, okay, we want to be involved in Republic somehow, would you recommend that they raise their whole round on Republic? Or do you actually advise them that there is some value in having, some venture backing, maybe for connections or advice or a more, personal relationship to turn to?
Community capital is only a component of the support and what a company needs to be successful. Venture capital comes with expertise, with the ability to open doors and make introductions. I absolutely think that the two are synergistic, and if a company is able to raise money from both its community and venture capital firms, you should do both. But that sometimes not a choice, not an option, or not a luxury available to a lot of founders.
Yeah, that's really true. And yeah, I think that would be the best of both worlds because, I've listened to interviews you've done in the past and you explain how sometimes you're providing the infrastructure. Like if someone already has a huge following, you allow the technology for them to tap into that and get their followers or their fans to invest in what it is they're building. But sometimes you actually really do need to bring the investors to these people. Say they have no connections, like wherever they're coming from, it is their way, their one and only entrance into the ecosystem.
And even as a founder of Republic, which has a decent sized community, we still went out and raised money from venture firms. Half Capital, as an example, is a major investors, and the opportunities that our VC investors had introduced to Republic, had opened doors. Those are things that are invaluable.
Yeah.
So very much as a duality that a founder got to pursue both.
Yes. And I really hope that, Hoff Capital has been, helpful, and we love Republic. We love you as a founder. I have heard you say that, like, not every VC, though, in today's ecosystem is particularly value adding. And I'm curious, do you think that's always been the case, or how do you think about that?
Well, I haven't been in the VC or the venture ecosystem for long enough to know if things were drastically different 20 or 30 years ago. But there's no question that in the past decade, there's been a proliferation of venture firms, of institutional professional investors. So just like friends in anyone's network, there are friends who are so additive, who are always there for you, and there are friends who are like, fly by, right? Fair weather friends. And I think that's up to the founders and the VCs to determine that match. But I do think that, not because I'm on a podcast with you, that I speak rosy about Hoff, but the attention and the time and the effort and the expertise that an investment team like Hoff is exceedingly hard to find. And I think a lot of firms out there have the capital to deploy, but without the genuine interest or the added value. So founders gotta sift through and make that assessment. When does money just mean money, and when does money mean plus?
Definitely, and I'm so happy to hear that. Something I'm curious about is your due diligence process, because you guys let on, if I understand correctly, less than 5% of the companies that apply to raise on Republic. What are the metrics that you are using to judge whether a company can or cannot, raise through your platform?
It varies a great deal depending on how late stage a company is, whether it's truly a venture backable company, or whether this is a restaurant trying to share its revenue. So depending on the sub-cohort, our due diligence process is different.
Yeah, so what is the difference between a startup and a small business?
So the way that I would define it is that a tech startup is one that is aiming to leverage technology and one day deliver a business model that is worth hundreds of millions of dollars in revenue and a valuation substantially higher. That's a tiny portion of the US economy, and even a smaller percentage of the world economy. Much of our world is driven by smaller businesses that don't aim to be $100 million business. They aim to be profitable, hire 100 people, maybe make $2 million a year, out of that $1 million in profit. Very, very viable. And so in those businesses, you wouldn't invest in equity, but you may share in that revenue. So if you invest $1,000 and you get a portion of that restaurant's revenue, on an annual basis, you're getting returns back. You're never gonna make 100x because that restaurant is not gonna be P.F. Chang's. Very few restaurants become P.F. Chang's, but that still is a very legitimate business model. So the investing world for Republic means a lot more than just startup or tech or venture.
Okay, so you would offer both, is the idea?
Yeah, so currently on Republic, we're probably the only that I'm aware of multi-asset private investment platform. So we offer fixed income deals. You can invest $200 in a residential home and get some income coming back, revenue sharing, music royalty, and a component of what we do is startup investing.
So you guys have been, as you said, music royalty, you've done everything. You guys have been so creative in what type of assets you have listed on your platform. And what is one dream asset that, Ken would love to have or invest through Republic? That's not there yet. Do you have any ideas?
It's a great question. I do. I think that there'll be a time, hopefully soon, maybe this year, knock on wood, that there's a real movie, a Hollywood movie, the next X-Men of that caliber, but that $5,000 of that budget in creating X-Men 20 or whatever it may be, that they open up that fundraising for fans around the world. And so say I'm a huge X-Men fan, I can invest $50 and get a special NFT. And when the movie is featured in theaters around the world, I want to take my cousins, my co-workers to go see it and know that there may be a cent or two from every ticket going back to my wallet. And so I'm never going to make $50,000 out of $100 investment in a movie, but I may make $80 on top of but that sense of belonging, that sense
Totally.
of So that'd be super cool.
That would be really sick. And that's a perfect example of where it would inherently make like the audience more invested in it. So that makes a lot of sense for the movie business. Hollywood, you guys got to get on this now.
I strongly believe that in the future, maybe a few years from now, in addition to wearing like a Versace shirt and shows that like, hey, I'm cool, what you show on your phone that you invested in early and that other people couldn't get in may be the new badge of like coolness or being in like the it crowd. Like I was so in that I got to invest one of the 100 investor in the next Taylor Swift album, and it shows here on my phone.
I mean, I think that would create a whole nother level of like brand and loyalty programs, in a sense where it's like every brand like has a loyalty program, and it's always one of the hardest parts of like the brand. Like I've heard this from so many people, and so this really I think would not only fix that, but actually just like make it such a bigger aspect of the brand, like people feeling loyal to it and feeling defined by it. Because there's certain brands that already do that, where like if it's like even certain streetwear brands, I know, like Mad Happy, for example, people that knew about it early love to wear it. It's an LA-based, streetwear brand that makes sweatshirts and sweatpants. And now that it's like sort of like blowing up more, I just still feel like everyone that had it early, it's a part of their identity, like that they had taste to like it early. And I think that goes with like music and all of these things. People want to be tastemakers, and this whole like trend that we're seeing just adds fuel to that fire and kind of capitalizes on that human desire.
And then once we add on the NFT metaverse layer, and your avatar can be wearing the same shoes, the same shirts that you bought like 10 years ago. And 10 years from now, they're like, wow, so you were one of those original purchasers. It's endless in the many iterations that we have yet to can even imagine.
Definitely. And we're talking about crypto, we're talking about metaverse, so there's a few things I want to ask you, but before I do that, my last question about due diligence is this. You are a founder, but you also probably see thousands of pitches a month for other founders, and like how would you advise them to be bold yet honest? Because like I'm watching The Dropout right now about Elizabeth Holmes. We crashed about WeWork comes out today. And I think it's actually like can be a gray line, maybe not in healthcare, but in other sectors, between needing people to believe in your vision and actually needing fundraising to carry it out versus distorting the truth. So it's like there is that gray line where it's like you have to almost be delusional and like create that reality as a founder, but at the same time, be honest, especially to your investors. So how do you advise? Where is that line for you? Like, how do you think about that as you're working with other founders to pitch on your site?
Another great and hard question. I don't think you can teach integrity. The only advice, I think, in life in general is that at the end of the day, it is integrity that matters, because that's the foundation of human relationship. So if you're gonna have any sort of a long-term view with either your company or a relationship you have with someone else, nothing matters more than that word, just integrity. And sadly, in this world, that's not a given. And I think it's for investors to sift through using their own lens of the world, and that's why a conversation or getting to know why a person is building something and trying to read the person either across from you or on a screen, on whether this person has not just the talent, the grit, but also the integrity to build something that may last a century. At least it's a lens that I'm looking for as an investor, and certainly that's how I think one should approach life as a founder and as a human being.
Totally agreed. And every call I'm on with a founder, I always try to ask, like, why are you building this? And also, like, how much of your life, how many years of your life do you want this chapter to be? Like, how in it are you? And to try to gauge those things. But it's true, everyone's a human, and in some aspect it's just like a moral code that I think you can feel or not feel at times.
I agree completely.
So back to the crypto talk, and very related to what we just discussed. I'm curious, like, for startups, you guys they have to audit themselves to get on Republic, and so you're making sure everything's, legal and legit. And how do you decide what to let on your platform? Because in crypto, there's a million things, and it can actually be really hard to understand, like, how far along these projects actually are, what the real value of certain coins are, things like that.
That is such an on-point observation. Not only that there's so many, the technology itself is changing so rapidly. And so what was not credible may very well be 6 months later very credible. My lens of NFTs a year ago turns out, or a year and a half ago, was definitely off. I didn't view it or didn't give it enough weight or credibility there. But at the end of the day, at least at Republic anyhow, we do focus on working with projects that already shows a lot of traction in building its own community, or that is a business, non-crypto, with a strong community like Chingari, that's like TikTok of India, and then help them leverage this technology to build out a token model that can further amplify engagement.
Yeah.
We rarely take on projects that are brand new for the precise reason that it is too difficult and too risky for our own community.
Yeah.
To try to select.
Totally. And how much responsibility do you feel in selecting companies for your community? And I mean, of course you take it completely seriously, but like, if there's a project that's legal and like the founders seem like good people and it has maybe some traction, but you might not think it's a winner, like, do you decide to let it on or not? It's hard because that's just your view. So do you let other people make their own assumption? How are you thinking about that?
So Republic got to be like a gatekeeper.
Yeah.
So we have the credibility lens, and do we believe that this may, or does it have the elements that may lead it to success? But it's a highly risky business in the sense that, I'll give you an example. In my case, the first 10 private investment that I did, the very first 4 of the first 10 was a 0 in each and every single case. Not until the 5th and then the 6th, 7th that they became, significant return. So even in my case, there was a total loss the first 4 times. At the end of the day, we got to make sure that our own customers understand if you're going to invest privately, you got to diversify and know that invest the amount of money that you can lose. But, and if you lose, is a great learning lesson. Don't invest like you're saving into something out of, a hope of like making rich or becoming rich quick. That's just not how one should invest. Totally.
And I think investing in startups, it's like completely about diversification, because even if you do so much due diligence, like, there's just such an element of luck that you actually never know which ones are going to be the ones that hit. And so you just have to take a lot of bets in order to win.
And Sabrina, when I first invested or started to invest in startups, the minimum investment was $10,000, right? It was on AngelList and similar platforms. Now, in some deals, as I mentioned earlier, some deals accept investments as low as $20. I can't tell you how often I buy random things on Instagram that I don't need. That are like $25. I bought a shirt the other day for $49.99 and immediately regretted it, but too lazy to return it. So if I can buy, or if anyone can buy a random product for $40 without any regulations, comparing to investing in a company and learning about this business model and learning what this investment instrument means, I think it's such a low-cost way to
It's
gain
so true. It's such a better investment in
Yeah.
actually learning than just consuming. I feel like we're obsessed with consuming, and it's so normalized that we wouldn't think about that. But I mean, making that type of example, it kind of hits a nail on the head.
And I wonder how much taking a class at Stanford, the cost must be, I'm sure in the tens of thousands of dollars.
It's totally, this is like something in between both. So, continuing on the crypto train, and the idea is that projects are changing so fast. What are your thoughts on DAOs, and would you ever integrate the DAO infrastructure into actually how Republic is like putting together the group of investors in each deal?
It's a resounding yes. No one asked me this question before, but absolutely. Now, how to do so compliantly is a challenge that I haven't seen anyone hack. That is, how do you roll out an investment DAO that's accessible to everyone? That I have not seen. But I'm optimistic that we're going to push out a few things in the coming year that's going to, showcase that it indeed can be done.
That's very exciting. I really look forward to that. And Republic spun off a company called EveryRealm, which was previously Republic Realm, and they're essentially investing in the metaverse. It's so early, but very important. How are you and them thinking about what will last in the metaverse? Like, how are you guys thinking about, what will be the winners and where is worth putting that capital?
Just like you said, it's so early on, so it's very difficult to say which metaverse is going to be the metaverse 10 years from now. Going back to, like, say, the mid or the late 90s, whether Google wasn't even in existence then, but there were a bunch of, like, search engines. It was impossible to know which one would be the search engine. We just know that whole industry is going to be big. So in very much the same way, whether it's Decentraland, whether it's a different metaverse, no one knows for sure. We obviously are investing heavily in a number of them. But the EveryRealm team, I think, is very ahead of other people in the space in identifying and actively building and driving traffic and communities for the metaverses in which they invest. But I gotta say, I would not know or would not be able to bet on which, if you put a gun to my head, will be here 20 years from now.
Totally. And do you see a world in which Republic could actually raise for, like, EveryRealm's next fund?
So EveryRealm actually had a campaign on Republic.
Oh, I didn't know that.
It's under Republic Realm as
Okay.
their former name, and they received $70 million
Wow.
in reservation from investors. So I have no doubt that Republic itself and our subsidiaries and affiliated companies like EveryRealm certainly were aligned.
That's so cool. I actually didn't realize that. I thought it was a totally, like, separate fund, in the sense that they took it from funds or, like, high net worth individuals.
They did that,
yeah,
and also from
I wish I had invested in it. And you guys also have a venture arm, right? Which is called
We do.
Republic Capital?
Yes, we have a venture arm called Republic Capital, a blockchain division called Republic Crypto, and the retail investment called Republic Retail.
And what is your thinking around having a venture arm?
So our goal, maybe this is a perfect point for me to share what we're doing now,
Yes,
and what
I'd
we
love
aim
that.
to be down the road. So where we are today, between the three business division, the retail division, the capital division, the crypto division, these are three rails that I believe are necessary for the next generation financial markets. That is, in order for retail investors to participate, you gotta show that you have product that the institutional investors also want. Otherwise, what are you selling? Leftover products? So because of that we have the capital division, and some of the deals that we do on the capital side are in fact available to retail investors. So down the road, though, the ultimate North Star is that we're going to give anyone on Republic the same options to make money, to earn yield, to own and invest like someone who's wealthy, rather than just putting that money in a CD account at 0.5% interest rate, which is ridiculous. But that's what 99% of the population do.
That makes a lot of sense. It's almost like, probably you're investing in great deals for Republic, but it's also almost an acquisition channel to get more startups on the platform that are, like, grade A startups, and building that relationship with them early on.
And
That's
as
awesome.
a barrier to entry, because those startups in the future, when they want to raise from their community, they're going to go to the retail side of Republic first before considering any alternative out there.
Totally. Yeah, and when you get no's today, though, from founders, when they don't go in Republic, what is their most common reason?
Which side of the business?
The retail.
Yeah, so when we have cases where we pitched founders to raise from their own community, and the answer is no, almost always is due to the high disclosure obligations. For example, in order to raise from our retail investor base, you got to share publicly through an SEC filing what your revenue was last year and what the cash position is in your balance sheet. Many founders deem that to be sensitive. They don't want their competitors to know, and because of that, they choose not to raise from retail investors. But once these obligations become more reasonable, I have no doubt that the value of community financing is so high that most would naturally do it.
Totally. And you just touched on it, but I just want to give you a chance to sort of speak on it a little bit more. What is your dream vision for Republic in, 15 or 20 years? It sounds like a whole new dimension of wealth creation in America and the world.
Our goal is to build a global household brand that becomes a one-stop shop for folks, whether you're a young professional in Vietnam or a retired dentist in New York. If you have $1,000 or $1 million, this is where you go to put your money. Maybe 80% of that in a high yield, low risk crypto staking account. 20% would be divided among some late stage deals, some early startups, and maybe a couple percentage point will go toward fun products like music and movies. So if a young professional in Vietnam can have the same choices like a retired dentist in New York, then I think we would go a really long way in bridging or solving that so-called financial inequality that we see everywhere in the world today.
That would be really, really amazing. And it's very cool that you are, working day in and working day out to make that a reality. I guess the one thing is, Republic's there, your team's there building this out. I guess I wonder legislation might be maybe the biggest hurdle. How has it been for you working with the SEC? And I'm just actually purely curious. The current SEC administration, what do you think their priorities are? Is it on crowdfunding? Is it on crypto or creating a digital dollar? Because I'm sure you've worked with them a little bit.
I would say that the current SEC, like the former, in the prior administration, are quite pragmatic. They may have different priorities, as you mentioned. I think the last administration, the focus was a lot more on let's get money to small businesses. And I think the current administration's SEC is more on let's solving bigger issues like post-pandemic and now in what's probably going to be a recession. And I think that they're on their priority list, things like crowdfunding is no longer the top 5 items. But I don't think it's going to be more hawkish. I mean, it's very unlikely that regulatory framework is going to be more restrictive. It's just a matter of how much more open and how fast it would be over time.
And if you could snap your fingers and, make any policy or regulation pass, what would it be?
I think it makes no sense to require a company to disclose revenue and financials to the world just to raise from retail investors. You're not requiring that in order to raise from VC. So I think this one, making accounting and disclosure obligations easier is certainly one of the areas that I think can easily be fixed. And just a lot more clarity around crypto to give founders some framework to comply, I think is also going to go a really long way.
For sure. And My last question before our, common podcast theme question is, this has been a long process. You've been building this since 2016, so I guess it's been 6 years. But, there's been so many changes, and I think in some ways this company, Republic, has actually worked to, change people's minds and, open up a whole nother dimension of investing. So it seems like it has been a long process. I guess, was there ever one moment where you almost gave up or it felt like everything was turning against you?
So there were twice in the past 6 years that we came very close to not working out. That is within a month or so of runway. And so everything looked dire in those moments, but I don't think that there was ever a scenario or a moment when I was like, you know what, I'm ready to call it quit. And the main reason is this: and I can see myself doing this for the foreseeable future, for years to come. If I give something, or in this case, Republic, my best, and it doesn't work out, nothing to regret, nothing to, look back and be sad about. But if I didn't do my best and give up too soon, then even if I have whatever other success in life, on my deathbed, we'll look back and we'll always wonder, had I tried another day, what if? And I don't want to be on my deathbed with my deathbed with any what if.
I completely agree with you. I think the what ifs in life are the things that haunt you. And I always think about that. I think sometimes when I'm at a fork in the road on a big decision, I always think what is there actually more ambiguity around? What am I more curious about? What I'd end up like, or my life would end up like if I chose that. And I think you have to I love that as being sort of a North Star of decision making.
And if I may add on to what you just shared, which I agree wholeheartedly, is that there's no such thing as failure or success for that matter. I think it's more about doing things that you feel like is the most worthwhile thing you can do at a moment in time. So the moment when you no longer feel this worthwhile, then it doesn't matter if it's kind of working or almost not working, stop doing it. And if it's the most worthwhile thing, then down to the last breath, you just got to do that, right? Irrespective of whatever future outcome that it may be.
Totally. Totally. And our last question, which I like to ask everyone that comes on the show, especially because I feel like news and media is very negative today, and it's easy to go on Twitter or go on your Apple News app and just walk away feeling way worse. When I feel like in VC, I actually get a lens into how many exciting things are going on, and I'll meet with 5 founders a day. Someone's trying to cure cancer. Someone is building a new investment platform that allows a lot more people to create wealth and feel involved in tech. It makes me optimistic, and it makes me excited for tomorrow and what our world will look like in 100 years. What makes you optimistic and excited for the future? It can be with Republic, or it can be with anything, what you're thinking about now.
I think there's only one way to live, in addition to making decisions that you find to be most meaningful, is to be positive and optimistic. That is the only way to approach life. You can't change the past. There are many aspects of the present that are outside of your control. What Putin decides to do tomorrow, you and I have no say. But what we know is that if we're optimistic and positive, we're going to bring our best self, whether it's being involved in a humanitarian effort, or in going about our daily life and brighten someone else's life. So I think optimism it's like working out, staying fit. It's an obligation. It takes effort, but we owe it to ourselves and other people to do it.
Yeah. And do you believe in manifesting? I just want to ask.
Very much so.
Yeah.
I think that we create our own reality to a significant degree. And I also believe in how contagious our feelings and our energy can be. So if you show up in a room and you're sad or depressed or anxious or fearful, it resonates, and we all experience that. So if we don't like to be said through association, why would we let other people have that if we bring not our best self to an environment? So 100%. I think the notion of individuality is overplayed. I think we are all so much more interconnected in ways that are tangible and intangible than people think.
I agree. I totally agree with that. It's true. Even you showed up today and you were very excited, and I was like a little bit nervous for the podcast, and I'm running through all the questions, but it ultimately like initially just made me feel excited, and it sort of like changed that nervousness into excitement. And like, thank you for bringing a positive vibe to the room. But I actually mean that it makes sense. That's why I wanted to ask. It makes sense that you kind of have like an intentional framework around that.
That's actually exactly how I felt. I got in early today on a flight, and I was a little low energy on the way here. And our interaction in the first 20 seconds like energized me. So thank you.
Oh, that's so nice. Well, I think this is a perfect place to end today. Ken, thank you so much for coming on the show. I really, really respect like what you're building and how it's mission driven, but also something that can make people money. And I think it's very cool that it's not one or the other. It has like a great vision for how it's going to, just enhance our future, enhance people's lives. And it was an honor to have you on today.
The pleasure is all mine. Thank you so much.